Hi, good evening, everybody. Tim Knight here. I guess I should be flattered because I put up this long essay that Oil Price wrote, and everybody was yelling about that being too long, and then I quickly put up a video that I found. I'm not done watching it, but it seems quite interesting. Basically about the dumbing down of America. Which, hey, if China plays their cards right, they can be like America too. Fat and ignorant, but we'll see if they make it. But people didn't like that one too much either. So let's talk about indexes because it was an interesting day, to be sure. In fact, this graph to me is just mind blowing. 21 days in a row of the Bulls being in control. Not since December 8th have we had any decent down candle. Just look at this day after day after day. And as some people have pointed out, it's like Doji City, man. I mean, look at all these bang, 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 over and over and again, where you get an identical open and close. Weird. It's like something's going on. But today was down, and you know, if yesterday was the top, I'll never claim credit for calling the top because how shall we say it? I've called 12 of the last one tops or so. It's so I'll never take credit for it, but I will say that Joe 888 or 8888, whichever it was, good old Joe from yesterday in his cycle analysis, really produced some fascinating cycle studies, which I appreciate. And I think those are terrific and quite interesting. But one day does not a bear market make, so let's all chill, man, and see what happens next. I, for one, am pretty pleased. At the moment, I've got, I guess, kind of poetically, 123, 123 short positions, and 5 long positions. And so, as you can see, I remain very heavily tilted on the bearish side. But as I said, let's take a look at a couple of indexes this evening, because what's going on is quite fascinating. So we'll start off with the Nasdaq Composite, and the reason that I called this post obviously is because if, and I put a capital I on that, if this is at or near the top and we descend from here in some meaningful way, 10, 15, 20%, I think people will look back at this point and say, why didn't we see it? It's so obvious. My God. I mean, look at that. I mean, any chartist at least. Because, it's just as easy in retrospect. Like when you're in the NASDAQ bubble and it looks like this. I mean, talk about a tough market to trade. I mean, imagine we were back here and it's, autumn of 99 and the graph looks like this, and people are going to assume that it's going to fall, and it goes up another 30%, it measured in weeks, and up to 5,000. I mean, look at that. Just that's like a dagger into the hearts of bears all over the world. I mean, just absolutely unbelievable. This market doubled in a few months after having gone up so much for so many years. But afterwards, when the top was in, and it did that kind of number, looking back, people, it was so obvious. The PEs were negative, and companies with no revenues had multi-billion-dollar valuations. Weren't we silly to not see what's so obvious now? And so, as a chartist, looking at these big honking multi-decade trend lines, if we do fall, it seems screamingly obvious that, obviously that's the top right there. But that takes time. We have to look back. Tops are only observed in the rearview mirror, not looking forward. Kind of ipso facto. So let's look at a couple of other charts. And this may come as a shock to you. I'm not working off a script. I'm just kind of making this up as I go along. I really never weary of looking at charts, so this is fun for me. Some charts aren't quite as obvious. I mean, that CompQ one we were looking at was a real beaut. The Dow has been holding up better than some of its brethren, in spite of the fact that Alcoa was such a stinker today. But this is as far as what's holding this back here. I mean, we're above the 50% level here. We're above this Fibonacci arc. As I've mentioned a number of times, will we actually muster our way up to the 11,250 area, where there's a couple of very hardy barriers? Frankly, I hope not, but my hope doesn't enter into the market's machinations very much. Doesn't really care. Here's the NDX. Now, this one has a couple of interesting things going on. First of all, we've got this fan line, and we are right at the 38.2, if I've drawn this properly. No, I think that's back asswards. Well, it's still drawn right. It's just labeled wrong right now because I drew it the wrong direction. But we're at this Fibonacci fan line here, right at the tippy top. Plus, we're at this rather interesting level, which is based upon the high to this low right here. So the NASDAQ 100 and the NASDAQ Composite both kind of agree that we're in the stratosphere on this one. Let's look at my old favorite, the Russell 2000. Zoom in here a bit. Now, this Head and Shoulders one, and this is something, as long as I've been charting, I just don't know. Does that pattern matter anymore? Is the fact that the target price was more than exceeded on this plunge, does that pat the Head and Shoulders on the back, say thank you very much, you've done your job, and it just doesn't matter anymore? I'm not sure. I don't think so. I mean, to my way of thinking, I believe what we've seen over the past year is a retracement to that pattern. Furthermore, this trend line here that I've drawn, it's come upon quite nicely. Setting all that aside, this years and years of activity on the Russell, to me, represents a profoundly formidable overhang of resistance. That, to me, renders the notion of a new bull market laughable. So there. I just don't think it's going to push to 1,000 or whatever number you might want for quite a few years. So this is, to me, very fascinating. But I'm finding things like this much more interesting, like the Ndu. And finally, let's direct our attention toward everyone's favorite index, the S&P 500. Oh my goodness, we have got a very ugly spike there. I'll let my data guys know about that. That should not be. That low did not take place. But ignoring that, with our mental liquid paper, we can see, having come upon this very big, very old, dating back to the Roosevelt administration. Actually, Herbert Hoover might have still been in office for a few more days. Way back to 1932, pushed up against that, and kind of an interesting one there as well. I get rattled by data spikes. Sorry, I got thrown off my game. So today is the 7th trading day of the new year. It is my first day with a profit, and it's a handsome profit. I don't like the fact that I've spent the first 6 days losing money, but mercifully the losses were small. I'm not in the green for the year yet, but I certainly aim to be. The responsibility I feel having undertaken others' money to manage is a responsibility that I take with a gravity and a humility that I think would surprise you. So anyway, do our best every day, and let's keep learning from one another. It's been an interesting day, and I look forward to the rest of the week. Let's see if we get one candle out of the deal, or if there's more to come. Good night.